You're live from the floor of the NYC with Jim Cramer. Jim, what's top of mind for you this morning?
Whites of their eyes. I mean, we're going to try to, some people are going to say this was the retest of Monday. I actually want to see it go through. We're not going to put any money to work until we exceed Monday's lows, which may mean we don't get anything. We put 40,000 to work yesterday, which is a nice chunk of our, we had 350,000 in cash and we put 40,000 to work. You can hear about that later in our proprietary video, but then you wait. I mean, Karen Cramer and I used to just sit here on our hands and say, okay, listen, we bought at this level. We can't buy more, and that's just undisciplined. So let's take a stock like Disney. Disney, I wanted to buy it. I think it's an interesting stock. It got to 101, 103, and unless it takes out that level, you really shouldn't buy it. That's just discipline. So what I'm saying is the market could rally, but it's going to have to rally without me because we already bought here. And I want to teach. Always we're trying to teach. And what you do is you don't double down at the same level because then you have no capital if it does take it out. Now, remember, we don't want to take risks to the downside. We're happy if the market goes up. We can reconfigure. We can get things out. But one of the disciplines that you must learn is I can't just buy because it's down. You have to wait until it exceeds your last buy. This has gotten me through, and these are rules that have made it so. Look, I've been at it for 40 years, and candidly, I've made a lot of money. And I feel that what happens is the undisciplined way is to say, ooh, it went down before, and now I can get it. And it's entirely possible that it does bounce. But then think about it. Think about what happens in this market. Yesterday I said that it was going to be up. Remember, I said it's going. Didn't think it would go down as much, but I said, listen, it's set to close above where it is or at where it is, and that's what it did because that's the way it works. Wherever they open it, they try to close it. I know it seems mystical, but it's what happens. So today's a down day, and maybe today's the day that a down day morphs into an up day. That's not been the way it goes. If it does go and you haven't bought anything, well, there's stocks to buy, and I can give you any number. We have for our charitable trust, we certainly buy some of our ones. I don't want to give away free what great people pay our club members. But if you didn't buy anything on Monday, you can buy something because now we're at this retest moment. But if you have, now you have to wait. It's difficult to wait because it requires a sense of patience that most people don't have. I have it. I was going over with Karen Cramer today, just levels. We don't talk about individual stocks. It's not what we want because of our, I just don't do that because of the show. But she's an index fund trader, and she just had 2 words from me, which was not yet. Now, if you go back and read confessions, I've always been friendly with my ex-wife, whatever. She's my ex-wife, but we take vacations together, stuff. Of course, with my wife Lisa, and her ex-husband Bill, and his fantastic wife Sarah. And what she always says is, what's your edge? What's your edge? And it's edgeless now unless you haven't bought anything. And in that case, you can go buy some Goldman, which is down 25 from its down 30 from its tangible book, but it has a lot of capital. I mean, that's the kind of thing you would buy.
Working from home has now become a reality for many Americans.
Yes.
And based on that, what should they be doing with their finances?
Well, working from home, I mean, by Zoom, by Teledoc?
Sure. Should they be buying the companies that they're telecommuting
Zoom
with?
Very much. I think Zoom is really going to be the way. Things are going to change. People are going to realize, a lot of people are going to realize, wow, with Zoom, I can work at home and be very much in touch. So Zoom is still a buy. Is Teledoc still a buy? I've been recommending that one. It's just caught a double. Probably not. That you have to wait. Maybe they should raise some capital or something. But I think that you would say, well, hey, I'm at home and buy Procter & Gamble. You're at home all day. But, that stock was at 78. I mean, I urge people to look at where stocks were. And that may be a good barometer for what to do. Again, could the market go up big today? Yes. Will it be done without me? No, I bought here. I can't just get up and say, you know what, I bought here, now I'm going to buy more. I mean, that's like going to a candy store and say, I bought Good and Plenty, You know what? I'm going to buy another box of Good and Plenty. Well, why would you do that? It doesn't make sense. But people don't think of it as that. They say, "Oh my God, it's a 780. I just saw it tick up to 760. I got to go buy some Good and Plenty." And when you think about it, like I got to buy a second dress, I got to buy another suit because I bought a suit. I got to buy another suit. Well, no. Now you wait for a lower price, and if you don't get it, you say, "I have a suit." Think like that. Think like clothes.
Should the average American be listening to the CNN, NBC push notifications that are telling them that the market's kind of volatile right now?
Sure, because what you want is you want to see whether the market is broken, meaning that there's just these crazy swings, where you might be able to buy stocks you really like, a TJX, really down a lot, and that's a great opportunity for the ages. So yeah, you should definitely stay in touch. I find that, there's just great bargains, but see, when I say the great bargains, this is for people who haven't bought anything. If you bought something, all you're doing is doubling down and getting a second Brioni, but you're not getting it buy one, get one. You're getting it what I regard as relatively full price versus where it might have been a couple years ago. So if you haven't bought anything, I bless some of the buys that we've done in Action Alert. If you have, okay, stay tuned. I'm sure there are a lot of people who are saying, you know what, it's bouncing around Dow 800, down to 800, down 800, and they want to buy. Again, if you haven't bought, yes, I totally agree with that.
Now let's talk about a Twitter question that we got. So Laura from Twitter is wondering if you like the cloud stocks now.
Yes, they're the highest growth stocks. Let's be clear, I like the pharmaceuticals, I like the utilities, and I like the highest growth stocks, whether it be in tech or biotech. And cloud stocks are the highest growth. So I do say that you can buy them. I expect them to go down, but and then they go back up. One of the things that sends that group down is a plethora of IPOs. And I don't know if you've noticed, no IPOs. Smile Direct and Casper pretty much destroyed that. People thought Airbnb could come public, but who wants to stay at a germ-filled house that's not been fumigated? So, I mean, I'm looking at it and I'm saying there's no IPOs, so there's not going to be a lot of competition to the highest growth stocks. Those are good, Catherine. You should be buying some of those.
And finally,
remember, I just want to warn people. I expect it to rally, okay? It can base, and that's terrific. But when I look at where it is, and a lot of the stocks held their lows today, but we bought near the lows, and we can't commit anymore. And we can't trade like a hedge fund. If I was a hedge fund manager, maybe I would scalp, buy some here, and flip it. But that's not us. So if you just join the club, or thinking of it, buy some of the stuff we bought the other day. Lower.
And finally, Jim, I have to ask, one second, I have to pull it up. So, we have heard from the president multiple times. He's now rushing me. So we've heard from the president multiple times, but the thing is, we see a market down today. We've got the Dow down 760 points. What do I need to hear as an investor, as a consumer, to be suited?
Let's go over what's happening in Washington. We have a Treasury Secretary who is completely on the case. We have a Chief Economic Advisor who knows what's going on. Now, you may say Larry is too optimistic. That's a lot of people that rap against Larry. Larry's a smart guy. He's my partner at Cramer. Secretary Mnuchin is focused on just what he should focus on, which is the small, medium-sized business base of the country, where you have a restaurant, and your cash flow of the restaurant, say your payroll and your food amounts to, say, $20,000 a week, okay? And that was based on the idea that you might do 24,000, 25,000, maybe you clear 5,000 a week. That would be very typical of a good restaurant. And then suddenly your cash flow drops to, say, $3,000. So then you have all these people. So what do? Well, your instinct has to be to lay them off. Those are the people that have to be protected. They didn't do anything wrong, and they're hardworking people. So he's not trying to bail out that fat cats, Secretary Mnuchin. He's trying to bail out the people who are less fortunate. That's what I want. Now, he works for a president that love him or hate him. You can't confuse that to be Mnuchin. He's doing right. Now he's going to meet with the cruise ship operators, and that's very good. I don't know. I think that we have to distinguish between companies and shares, okay? Does Secretary Mnuchin want to bail out the Royal Caribbean shareholders? No, but there are a lot of people who are employed by Royal Caribbean, and he doesn't want them to have to go into reorganization. I don't like Carnival. Why? Because I haven't liked the cruise ships forever. I mean, I also think that the moment that you heard about the cruise ship off of Yokohama, Diamond Princess, that was the end. Okay, it was the end, because this is not like a Contra Costa crash. This is like, okay, I go to the CDC page, I see all these infectious diseases that have been on cruise, and I say I'm done, particularly if you're an older person. Remember, Dr. Fauci said older people shouldn't take cruises. And I think Dr. Fauci is one of my idols. So why own those? You're owning those betting that Secretary Mnuchin's going to bail out common stock shareholders. I got stocks like Bristol Myers, beautiful stocks that are being brought down. I don't want risk. So I just want to warn people that while the Secretary is doing everything I'd like him to do, that may not be enough for common stock, but it may be enough for the working man. And that's who you have to worry about, working person. That's who you have to worry about. And I know this because I own 2 restaurants.
Should investors then be also staying away from like Uber and Lyft because of ride hailing?
I've been trying to figure out that. Someone called me on the lightning round yesterday, and I was thinking that Uber, there's a number of pieces today about the auto sales are going to go down to 15 million from 17 million, really hurting Ford, and that dividend could be challenged. I think Uber's a great growth company, but this is not the time to invest in companies that are money losing. But if you think that Len Schleifer and George Yancopoulos, the doctors, if you think that the Regeneron antivirals are going to succeed, of which there's a very good chance, because remember, they conquered Ebola, then you're going to wish that you bought right here. So the upside, the bull case that you have to be recommending, you have to have it front and center, is what Regeneron's doing on antivirals. And the reason why I am reluctant to say sell everything is then I'd be betting against the people who run the Regenerons of the world. And I don't want to do that. I want to keep a hefty cash position. You could say, well, why are you in any stocks at all? Well, we just wrote a check for $200,000 in charity. That's why. And it's a long-term charitable trust. So we're going to own stocks. I mean, we're not going to short this market and try to buy it back at Dow, 780. But I do think that you're betting against Regeneron et al. If you short the market aggressively here. And you can do that, but I would not bet longer term against them because they're too good.
All right, Jim, thank you for joining us today. Over on The Street Live, we are trying to bring you every question that Wall Street is being asked. So please send them in on Twitter at TheStreet or at by Catherine Ross.
Yeah, we want more questions. I mean, look, I think these videos are very free form. I love talking to Catherine, and they're all split up into different pieces, but our goal is to try to teach. I mean, that's what I want to do. And I was going to retire and teach, but this is a better classroom. And all I'm trying to say is I am willing to miss the next 500 Dow points in a market that's broken. They could happen in blink of an eye. But we bought here. Don't go buy a second suit at the same level. Make sure the next suit is cheaper.
So, of course, tune into Professor Cramer over on ActionAlertsPlus.com. We are now going to head over to our Action Alerts Plus Daily Rundown show. But before we do, I do want to tell you guys that our members-only call has been postponed to next week. We will, of course, fill you in as soon as we get more details.
Logistical reason. Because we're doing some things in order to be able to avoid an overlap of people who might have corona. Who might be susceptible, and we don't want anyone to be sick. So the reason, it's not that we don't want to do the call, but we have to relocate, and therefore it's just kind of too hard to figure out our relocation. I will not be from downtown tomorrow. It'll be from Englewood because we're splitting up the team.
Yep, so we will be live from Englewood tomorrow.
Regeneron fixes it.
All right, guys, thanks for tuning in. Now, as I said, of course, head on over to ActionAlertsPlus.com with us. I'm Catherine Ross, and we'll see you in New Jersey tomorrow.